So today we are going to talk about home loans, and this is the most critical financial decision that we take in our lifetime. And that's where a lot of us make small mistakes that cause us lakhs of rupees of losses over a period of 20-25 years. So I want to make you careful about some of those things, and I will tell you how to choose the right loan, the right lender, and how to save some of those charges which are levied by different banks. And in this video, hopefully, once you go through the entire length of the video, you will be able to save more than 10-15 lakh rupees easily, but it's by applying some of those basic principles. Uh, and I will not take much time, so let's start with the video. There are many YouTube videos where you can find the overall process of a home loan. But unfortunately, they are not telling us about the hidden facts which are there because maybe many of them may not have experience. I'm going to tell you about my experience, about the actual facts which are important for any new home loan if you're going to take. So let's start the video. I'm going to share my screen and be with me. So this is the high level process of a home loan where you start with selecting the property, calculating the loan amount, selecting the lender, and loan processing. But in this video, I'm going to stick with how to select the correct lender and where you can save money in the loan processing part, because these two are the critical part where you can save a lot of money in future. This is simple. I mean, you can do these things, selecting property, calculating loan amount. Maybe I will create some other video to cover these two items, but today's video is all about these two things, which are the most important part. So let's start. And within this, if you see some of the basic things we need to understand. First of all, the different interest types, the charges which are there, and then selecting the correct lender. So that's is the objective of this video, where I will help you to find the correct lender. Now, if you talk about the interest rates for home loan, so there are basically two types of interest rate. One is fixed rate and one is floating rate. Now, what is the difference? Now, fixed rate, as the term says, is a fixed rate over a period of the entire tenure of the loan. So, if you are going to take, say, a loan for 20 years, home loan, the fixed rate bank may offer, say, whatever 9% or 9.5 or 10%. So, that is going to stay for the entire tenure. Now, floating rate, what happens is that it is linked to a benchmark. It can be internal benchmark or external benchmark. Now, as the benchmark will change, your rates will keep on changing. And most of the banks and financial institutions, they change it every quarter. Okay. So now what is the difference? Now that's where the difference is like, for example, when we have to understand this, and you can check with any bank also. Now, if, for example, if the floating rate is say 8%, you will find that if you go and check for the fixed rate, it will be in the range of 10 to 11%. That's the difference, high level difference I'm telling you. There is a difference of around 2 to 3%, and at times more than that, between the fixed rate and the floating rate. Now, the second part, floating rate. Within floating rate, you have repo rate plus margin, and then there are some financial institutions which are benchmarking against MCLR or PLR, which are their internal benchmarks. Repo rate is a RBI benchmark. So this is something we need to understand very clearly, that this is not by a bank. This is RBI. And that's, guys, that's the big difference. Because see, when you take a home loan for 20 years, it's not about 1 or 2 year loan. And if it is MCLR, PLR, so you are actually depending on the bank or the financial institution. You don't know how they are calculating that. But in case of repo rate, you know and you can trust RBI. In case of fixed rate, there are some issues which are there. One, the rate is high. Then there are pre-closure charges which are there. You cannot make prepayment. So what is prepayment is basically if you get surplus fund somewhere, like for example if you got some a bonus or something, you can go and prepay the amount in case of floating rate loan. But in case of fixed rate, you cannot do that, or there will be charges for that. So that's where floating rate is the interest, or the interest rate that is the best suited interest rate for any home loan. And that also you can see repo rate. So we'll come to that. uh, and why I'm saying that, you can see the chart here. Now this is the RBI repo rate trend over a period of last 20 to 22 years, and you can see from around 2005-6 onwards, it has been trending between 6.5 to 4%, you can see. And in fact, as the economy was becoming more and more stable, it was going down. From around say 8%, it went down to around 4%, you can see. And this was almost static at 4% till the Russia-Ukraine war that started in 2022. So this started increasing because of an external factor, Russia-Ukraine war and the inflation rate. But hopefully in future also it will stay in the range of 6.5 to 4%. So there is high tendency that it is going to go down now in the range of 4.5 to 5% in the long run. So that's why it's recommended to go with floating rate interest, because that's where the rates will decrease in future. In case of fixed rate, if you today you go and take a loan at fixed rate at say 10.5 or 11%, it will remain 11% for 20 years, and there will be huge losses for you. So that's why first thing, floating rate. Now coming to other items. Now one thing is clear. Now guys, this is an important table. Just try to understand. There are NBFCs giving you loan. Okay. There are bank home finance companies giving you loan. Then there are PSU banks, private banks. So these four categories you can go and take loan. Now governed by RBI, you can see these two are governed by RBI. These two are no. Okay, so that is very important, guys. Then there are MCLR, PLR linked loans, right? Here it's repo rate linked loan. Repo rate, you can trust RBI. MCLR, PLR are complicated and not transparent. Very and very important item to understand. Here it's completely transparent. Then eligibility criteria, of course, these are PSU banks, they are transparent, repo rate linked. So their documentation will be slightly stringent. But if you are doing a job, working class person, you should first approach any bank. And if PSU bank you are not getting the loan, of course private banks, they provide better servicing in the long run. So that ways the preferred are like private banks, ICICI kind of bank, you can go there. Or if you're getting from PSU, great. But that's where the catch. So this is the second item. First item, go with floating rate interest. Second item, go with banks which are providing repo rate linked loans. Please note this down. You should not take any other loan linked to MCLR or PLR. You have to take repo rate linked loan only. So this is the second item. And why I'm saying this. See guys, within say for example, you will tell me that I went to private bank, HDFC bank, it's giving me loan. But actually you may visit or you may take loan from HDFC finance company. So there is a catch there. There is ICICI home finance company also. You should not take loan from here. take loan from bank only. You go to your nearest branch of the bank and tell them, I want to take a loan from you, a repo rate linked loan, nothing else. So guys, this is where these are the small, hidden things people are not telling us, and we end up taking loans from housing finance companies which are not linked to repo rate. And when in future the rates will go down, banks will reduce the loan rates, and you will find that your friend is paying 6% home loan rate and you are paying 9% because you have taken loan from a housing finance company. That's the catch. Initially itself, when you are going and selecting the lender, select a bank, select a loan which is repo rate linked. So I hope you guys are now very clear that one, floating rate, and second, repo rate linked. Now these two are clear. Now let's move to the third item. Third item is also very important, which is your different charges which are there. Okay, so this is a simple table I have created for you. I am assuming a 1 crore loan for the simple calculation, and since I stay in Mumbai, so I am taking the stamp duty charges that we pay in Mumbai, which may vary as per your city. So now in terms of processing fees, this is, I am saying, around 8,000 rupees. It also varies from bank to bank. It will be up to 1% maximum. Okay, not more than that. But generally, it's much lesser. Okay, and then there is something called legal technical fees, which is around 5 to 6 to 7,000 rupees, which at times they don't tell us in upfront, but you should ask them exactly what are the fees you are going to pay. So processing fees, legal technical, and then the third item, which is the actually biggest one, is the stamp duty for loan agreement. So in Mumbai, we have to pay 0.3% of the loan. So that's why 30,000. So 1 crore, for 1 crore loan, you will be paying 30,000 rupees. And in your different cities, it will be different, but you should know that this is the amount you have to pay. So approximately, I'm saying around 44 to 50,000 rupees for a loan of 1 crore. Now, where all you can negotiate and make sure that you pay lesser. Let's get into that. Now, in the negotiation part, while these 44 50,000 is fine, but guys, try to understand, this is not the biggest amount that you're going to pay. Where you have to be careful is the interest margin. Now, earlier, as I told you, let's assume we are going to take a loan which is linked to repo rate, and let's assume that repo rate is say 5%. Now, bank is not going to give you the loan on 5%. It will say that I will put a margin of 2.5%. Okay, so the total interest rate that will be applicable to you will be 7.5%. Okay, so now this 5% is RBI, so nothing can be changed here. But where you have the negotiation power is here, and that's where you have to negotiate and make sure that you keep the margins as less as possible. And for that, you may have to do some homework. You should visit 2 3 banks and try to figure out the least margin that they are asking. And that's where you can then negotiate with your bank, telling them that, see, Kotak is asking only for say 2% margin. Why are you asking for 2.5? So that's where you can negotiate and get the margin rates reduced so that you take the loan at the lowest possible interest rate. And that's where, guys, you can save a lot of money. Say even 0.3% higher margin on a 1 crore loan is equal to 5 lakh rupees over a period of 20 years. On a 1.5 CR loan, it is 7.5 lakhs rupees. That's how much you can save by just working or negotiating on the margins. Processing legal, of course, you can negotiate processing fees. A lot of banks at times waive off that. Legal technical, they will still ask for that money, and you can try to save as much as possible, but focus on interest margin. This is secondary. First is this. So guys, I think so far we have covered the critical items like go for go with floating rate, then go for a repo rate linked loan from a bank, not from a housing finance company. Then third thing, focus on margin, negotiate on margin. Make sure that your margin is as less as possible so that your interest rates are competitive. Now, the last item which I'm going to talk about is the basic process of dispersal. So that you are also careful. Now, here there are just one or two critical things which we should know. So, generally, we approach a bank. There will be KYC, income tax documents that they will ask. Then, basis that they will issue a sanction letter. Now, here we should be very careful. We should not be very happy that okay, fine, I've got the sanction letter, I will get the entire amount. No, that is not the case. After that, you will do the sale agreement and all that. Bank will ask for sale deed, builder NOC. That bank will do legal technical, and then guys, bank will issue a revised sanction letter. Okay, initially it might be say 1.5 crore, but after that, bank will say, for example, I will give you loan of 1.2 crore only. You will be in a fix because you have taken the already done the sale agreement, everything is done. So this is one hidden thing that I'm telling you, that try to get the legal technical done upfront. Make sure that you know what how much funding bank is going to give you so that you can make the arrangements accordingly. So guys, hope you guys liked the video. There are many important things I have told you, and so that you can save a lot of money in your home loan. And if you liked the video, please subscribe and hit the like button. Thank you for your time. Thank you. Bye.